and welcome to At the Forefront Fintech Conversations. I'm Sam Belden, VP and Head of Content at Forefront, and today I am joined by Saeid Kian. Saeid is the co-founder and CEO of Ribbon, which is a provider of deposit retention solutions for credit unions. Saeid, welcome to At the Forefront.
Sam, thanks so much for having me. Appreciate it.
Yeah, of course. Really looking forward to today's discussion. I know that we are going to get into some of the shortcomings that you guys see in the inheritance process, how to fill those gaps as the great wealth transfer is occurring, and then some points on digital transformation, best practices for credit unions, regional banks, other companies like that. So we'll get to all that, but let's start at the beginning, Saeed. I know that you founded Ribbon in response to shortcomings that you saw in the inheritance process. So maybe you can give me that origin story and tell me a bit about how your company is creating a better experience when it comes to inheritance.
Yeah, I'll give you my full background. It all kind of links together and led to the creation of Ribbon. I'm the first in my family born in the U.S. I was born in the East Coast in Virginia. I went to school there, graduated there, and after graduating, I actually moved abroad pretty quickly. Started off my career in Southeast Asia. I was doing consulting work for large development organizations like the World Bank, the ILO, the IFC. That's actually where I ran into fintech and mobile money and a lot of the concepts that folks were talking about in terms of being able to help those who are disadvantaged and left out of the financial system, and then moved to help launch a mobile money company. I did that in Myanmar for a few years. And after doing that, moved to Singapore, started working for Facebook back in the days where it was just called Facebook, doing a ton of things with them, mobile money initiatives, connectivity initiatives, et cetera. In Singapore, still then moved to Stripe, was helping them expand into new markets, think about new payment methods, et cetera. 2020 hits, my wife and I are in Singapore. I get a call from my dad, and he tells me that he has stage 4 pancreatic cancer, that has spread everywhere, that it was, essentially the worst case scenario. And my wife and I took a step back. We were obviously really hit hard by the news. And we just started thinking, like, what do we want from life? What do we want to do? What are our values, et cetera? We decided to move back home. So we go back to the US. So, we help them go to chemo, help them go to radiation. We do last father-son trips together. We do all the logistics. We add myself to the accounts. We cross T's, we dot I's, et cetera. He eventually goes through hospice. He eventually passes away. We were obviously really hit hard by that, but not necessarily surprised. He went through hospice, so to some degree that's expected, right? The thing that was incredibly surprising, though, and that frankly shocked me, was just how messy, complicated, and how much of a logistical burden the inheritance process was. It felt like everyone kind of sold me this narrative of do the work up front. It pays off massively. You don't have to do much, in terms of logistics. You can focus on grieving. I did not find that to be true. What I found to be true was if you don't do the work, it's an incredible nightmare. If you do the work, it's a slightly less bad nightmare. And I just felt like everything was offline. It felt like everything was, requiring a ton of my time and space. Mind you, I'm someone who did not and does not have kids. So, I actually had one of the best case scenarios. I had the ability to go in branch without having to juggle a bunch of other people's schedules, where most Americans don't have that luxury. And at a certain point, it just felt like a lose-lose, because I knew I was losing out. I was the person who's grieving, spending a ton of time going in branch, 4 visits over 4 weeks with one credit union to be able to get my account handed over to me. But then I also thought, like, these institutions I'm dealing with are losing out, right? First of all, they're spending a ton of time in my case, right? So from an operations perspective, it's like a ton of time spent per deceased account. Second of all, I took the money and I just left, right? Like, they didn't keep that business for the most part, unless I already, it's 1 or 2 cases I already had business with them, or if they gave me a great experience, which is very, very rare. And it felt like, why is it a lose-lose? Why is the person who's grieving having a really hard time? And at the same time, the institution, who has a huge incentive to want to make this seamless and be able to keep their business, why are they also losing out and letting deposits walk out the door? And when I met my co-founder, we realized that a win-win's possible. So that's where Ribbon came through. And we said, if we create an inheritance platform that's a win-win for everyone, where you spend less time per deceased account, you're able to retain deposits for the financial institution. And if you're someone who's grieving, you have a self-serve option that makes sense for your schedule, something really special can happen. And that's what we ended up deciding to build. And that's what we're doing right now.
Saeed, thank you for sharing that story. It's really interesting to hear how you kind of saw that opportunity to make people's lives better during stressful times, but do so in a way that sort of adds efficiency and serves businesses that are important, like credit unions. So thank you for sharing that. I was doing a little background research for this conversation, and I saw a figure. Bankrate recently reported that $84 trillion is poised to move
Yeah.
from older generations to Gen X and millennials as part of the great wealth transfer just in the next 20 years. In your opinion, do you think the financial services industry is prepared for this shift?
I'll say one thing about this, which is it's a frog in boiling water situation.
Mm.
So this, great wealth transfer, that 84 trillion that you just cited, it's obviously an astronomically large number. And what we're seeing is it's not going to just happen in one day. It's not like, hey, January 12th, that's when it's all going to be transferred over. Instead, it's exponential and growing over time. So when it comes to whether or not the financial services industry can actually participate in this, pretty much what you see is a tale of two financial services industries. You see one financial services industry group who will either have incredible resources, think mega banks, a lot of money, a lot of employees, pretty easy for them to just siphon off a project and be able to dedicate time to this. Or you'll see folks who may not have those resources and instead decide to have partnerships and be able to find clever ways, even if they don't have the internal capabilities, by partnerships with external vendors or service providers, and take this seriously and build out the plumbing now. And what you'll see is another group of folks who maybe they don't have the resources, maybe they're not prioritizing, whatever it is, they're not investing in actual plumbing. And 10 years from now, there's going to be a huge difference in the performance of those two in the Great Wealth Transfer. So what I see is already a siphoning off. It's this one category that's prioritizing, that's taking it seriously, that's putting in the plumbing right now. And the dividends for that are not just growing, but they're exponentially growing. And you see another group who's kicking the can down the road. They can get to this next year, they can get it to the year afterwards, like, well, we can figure this out later. This kind of like laissez-faire, stand back approach. And I think those are the folks who 5 or 6 years from now are really going to be scrambling to try to keep up.
Great. And I know that in your work at Ribbon to solve for some of those inefficiencies, you guys focus on credit unions. Can you tell me a little bit more about why you chose to have that specific focus?
Yeah. So, I'm a member of a credit union. My co-founder is a member of a credit union. If you go and talk to, 100 different members of credit unions across the country, and you ask them, why are you a member of a credit union? 100 out of 100 of them will give you some kind of answer that's around like the general theme of they are very good at giving me a great relationship. They care about me, and I feel like I have a personal touch with them. So when we went to market, we wanted to see who are folks that had value alignment, right? Who really cares about member experience and non-member experience, who really cares about those personal relationships. And at the same time, who's really thinking, I need to make sure I'm part of that great wealth transfer, who's thinking about wanting younger member base, right? Who wants to be able to have a member base that's on the younger side and be able to be strategically placed for that over the next few years. And credit unions just really stood out, right? I mean, you go talk to any credit union, they'll almost always have someone who has a full-time job on member experience. So we just felt like it was a natural values alignment in terms of the mission, in terms of what we wanted to provide, and in terms of what their core goals are, which is deposit retention, having a younger base, providing a great experience. So it just felt like a perfect match.
Great. That makes a lot of sense. So thinking about that space more broadly, obviously there is a lot of innovation happening in the banking space and fintech more broadly. And when I think about credit unions and regional and local banks as well, you talked about that focus on the customer, the relationship, the fact that you really feel a sense of connection to your provider there. How do you think that credit unions, similarly, comparatively smaller institutions can sort of maintain those values while keeping pace with all the digital transformation that's happening today?
It's funny. I actually see these as complementary.
Mm.
To me, innovation and digital solutions is a tool, and that tool can be helpful or it can be distracting. And what I see is a lot of the values that credit unions have is about providing a great experience, by providing great relationships, by being there for their members. innovation and innovation solutions are actually directly aligned with those core values. And what I mean by that is, for example, what we're seeing more and more is folks want hybrid solutions, both in person and online. We're seeing self-serve be an option that everyone at this point more or less expects, right? Like I have an app, I can deposit a check easily with my phone, those kinds of things. So what we see is what credit union credit union industry is doing right now is that they're having this wake up moment where they're realizing that I may not be able to do all the innovation internally. I may not be able to, hire 50 engineers and build out all these things, but there are a lot of folks out there who provide these different kinds of services. What are my goals? What are my priorities? And how do I lean into innovation so I can continue that basic and core ethos of having a great relationship? That doesn't mean outsourcing everything. So everything is just some AI chatbot or some AI voice, right? We know like that's actually the kind of the opposite direction that they should probably go in. You want to be able to have this hybrid solution of we have a branch, you can talk to a person if you want to talk to a person, that's always there. But we also have this self-serve that's also really easy. And offering innovation through those means is going to be really, really helpful. So I see these as complementary. And if there's a thoughtful approach from a credit union to be able to offer innovation while at the same time not giving up that core experience, I think those are the credit unions that you're going to see be extremely successful.
That's a great perspective, and I think that it's a balance that, to your point, credit unions are going to have to be very mindful of going forward. You mentioned AI, that's certainly going to have transformative potential far beyond what we've already even seen. So good reminder that it's all in the balance, and that maintaining that focus on the user, on the customer, should remain paramount for firms that provide that kind of value. Thank you for that. Beyond just the need to sort of provide better experiences for their customers, and beyond needing to navigate the great wealth transfer and the inheritance implications that will have, what's one trend or one force that stands out to you that you are observing in the credit union space?
So it seems almost self-evident at this point, but this generation, particularly Gen Z and the newer generation, it is table stakes to offer digital solutions and digital services. So that trend, which we had always talked about for the past 10 years, is now officially has accelerated and is continuing to be exponential. So of course, the great wealth transfer is going to be this massive, massive event that, it would be silly to not participate in. But what you see is underpinning all these large events is the continuing need for younger and younger generations to have digital and self-serve options. That doesn't mean exclusively. I think a lot of times, a lot of folks took that concept a little too far. That doesn't mean digital only. Right. I think a lot of times if you talk to Gen Z or younger generations, they're still saying they want the ability to call someone. They're still saying they want the ability to go and branch if need be. But at the very, very basic minimum is always having a self-serve option readily available is now table stakes. It is no longer a differentiator. And if you don't offer it, it is a huge, huge miss out, and will likely lead for you to lose out on a huge member base and potential for member acquisition. You see studies left and right talking about how the differences between generations for having not just a mobile application, but things like mobile banking, check deposits, bill pay, all of those different aspects of a relationship with a financial institution. And this new generation of Gen Z, it's the vast majority. In some cases, you see 8 or 9 out of 10 respondents saying it's at this point table stakes.
Makes a lot of sense. And I think to your earlier point, if you can combine those great, easy self-service experiences with the ability to pick up the phone, get someone who really understands your situation and provides you that level of customer service, that feels like the secret sauce that will allow credit unions to stay at the forefront for the long term. So great perspective. Thank you for that overview. And thank you for a great conversation today. Enjoyed hearing about your story, some of the implications of the great wealth transfer, and then how credit unions can kind of stay competitive, stay nimble as they navigate these emerging forces. So if you'd like to learn more about what Saeed and his team are doing at Ribbon, you could go to trustribbon.com, or to listen to more episodes of At the Forefront like this one, you can go to forefrontcomms.com. That's comms with 2 M's. Head over to the news and insights section for a full episode archive. So until next time, this has been At the Forefront. Saeed, thank you.
Dan, thanks so much for having me.